Hi, this is Alessio. Hope you're well. In this video, I want to cover the chart of Tesla stock briefly as possible. In fact, some of you have been asking me for an update on this chart. So let's dig into the chart of Tesla and explain what is likely going on here. And also, I'm going to take a look at two potential wave counts on Tesla, one bullish wave count and one bearish wave count on Tesla, and explain which one I think is much more likely. All right, guys, should be quite interesting. Join me. All right, guys, welcome back. So it's been interesting last few weeks on Tesla, as we can see here. The last time I actually made an update on Tesla, you may remember what happened here. That was back in July, I think it was. So notice, as Tesla stock was rallying here, I was warning that, look, Tesla is reaching extreme overbought conditions here on the RSI 34 setting. So 34 is a Fibonacci number, and usually when we apply the 34 setting of RSI here to Tesla, notice it became extremely overbought here. And these overbought conditions were not seen since June of last year. In fact, you can see that in June of last year, the RSI 34 setting became extremely overbought right there. And then soon afterwards, you can see what happened. It then was followed by strong drop pullback, just like it occurred over here. After overbought conditions, we saw a very strong deep pullback. So that's why technicals do matter, and that's why we look at them. Okay, so another important thing is that Tesla has just recently broken out again through this trendline resistance, and also the most recent high that it made right there. So that's a good sign. We're seeing signs of strength here in Tesla stock, and as a matter of fact, we can see that, yeah. So it's surging higher, and we're not far away. As a matter of fact, Tesla stock is not that far away from the highs it made just before that drop that occurred there. So I want to explain to you what I think is going on here, again, briefly as possible. I don't want to make this video too long, but what I think is much more likely now as far as the targets are concerned and where I think Tesla is going. And it's quite simple. What I would like to see is Tesla staying above a key support level. And the support level I have in mind right now is right about here. I would say, let me just get my pen. So I would say it's here, about 202, or let's just say 200, let's keep it simple. So notice, for example, Tesla stock here retraced. So you can see when it dropped, it retraced down to the 61.8% golden ratio retracement of the prior rally. That level is about 189. Now that level is important too, about 181. So that low that it made there, that low that was made just about 181, 182, that's going to be very important, this green line. So Tesla really needs to stay above this key level, 182 or 181. But I would say even this level is going to be important here. This most recent low, the 202.59 level there, blue line. That level I think is going to be extremely important for Tesla to protect. So in other words, if bulls are going to remain in control, Tesla must stay above that level. Okay? Because any drop below this level, now I'm not saying it's going to happen, but if Tesla were to breach and fall below that level at any point in the next few weeks, then that would be a very dangerous and bearish sign for Tesla, if that is, it were to breach that level. But for now, as long as Tesla can stay above and protect that support, that low that was made there at about 181, 182, I'm going to remain bullish, cautiously bullish on Tesla. Okay, so I'm actually expecting higher levels. Now, there could be a pullback in the short term. I mean, currently we're retracing back to the 78.6% Fibonacci retracement there, as we can see. So there's a bit of a, so reaching actually a point of resistance right there, and also psychological resistance right here as well. That's about 250, this level right here, this purple level, the 78.6% Fibonacci retracement, about 250. So that might create some resistance for Tesla. We'll see. It might breach that level, we shall see. But the bottom line is that if Tesla holds this level, 250, we might see a temporary pullback. My point is this, whether Tesla has a pullback or not, the bottom line is that any retracements or pullbacks must be able to stay above this support at about 200, 202. As long as we stay above that level, for now, bulls have control. And for me, this bullish wave count is the more likely scenario and wave count for Tesla stock in the next several months, going to perhaps next year. Okay, now I'm sure you've seen this particular wave count before. I showed it to you some months ago. So quite simply, what this means is that from the highs we made here in Tesla in 2021, we had an A wave drop, a corrective drop, as we can see there. And then from that low that was made in early 2023, which by the way, we got bullish on, you may remember, we got very bullish on Tesla right about here. Then we started the A wave, the smaller A wave of the larger B wave. in blue. So this was the smaller degree A wave. Then we had the B wave retracement here in yellow. So A, B in yellow. And now we're likely starting the C wave. So provided Tesla stays above this key support, this near support here about 200, 202, my view is that we're quite likely in the C wave in yellow, taking us eventually, perhaps by the end of this year or maybe by next year, perhaps by the start of next year, to those upper levels. Now, I'll talk about this in a few minutes, but the bottom line is I think we're now in the C wave of the B wave in blue. In other words, this would be our B wave, okay? The bigger B wave. And then once this B wave completes, likely in this zone, which I think could take us to this zone here, between 314 to 338 to potentially 350 to 360 levels here. So I think there is a chance that Tesla could rally to this level here, the 78.6% Fibonacci retracement of the prior decline here at about 345, 360. So to put it quite simply, in my view, as long as Tesla stays above this near support, this level here, at about 200, 202, I think bulls are in control. And despite any pullbacks that may occur, but overall, I'm still expecting the longer path, the bigger move as part of the C wave of B to take us into this zone between, again, 314, 338, 345 to potentially even 360 regions there. Okay, that to me is much more likely. And by the way, I'm sure you've guessed it. Once the C wave of B completes, likely in this zone, then I think we could see a top in Tesla and then eventually start the bigger C wave, perhaps next year, not this year, but next year we could see the start of the C wave down to much lower levels. In fact, below the lows that were made in 2023. Now, before some of you get scared, let me just say this. At the moment, let's just put this out of our minds. Okay, so even though I think that we will see a top in Tesla sometime next year, if not this year, so I think we'll see a top in Tesla in this zone. By the way, I know some of you are probably thinking, well, could the B wave extend all the way to the highs that were made in 2021? Yes, it is possible. There is a possibility for the B wave, for this larger rally to extend even as high as the prior highs that were made in 2021. That is possible. But for now, I'm dealing with what is probable, not with what is possible. So I think the higher probability is for this B wave, there was a C wave of B to take us in this zone that I mentioned, between about 314, 340 to potentially 360, and then for the B wave here to top. By the way, I think at this point, eventually when we reach this zone, I think there's going to be a lot of bulls in this market. So a lot of these mega bulls, the Tesla bros, they're going to be saying, no way, Tesla stock is never going to crash. We're going to see Tesla continuing to go much higher to $500, $600, $700. I mean, these guys are going to be full of it at this point. They're going to be so bullish at this point. But I think that's the level. Those are the levels where potentially we should be very careful because we could see a top in this region, likely next year, not this year. Again, I don't know exactly when next year is going to be. But again, I'm expecting some kind of a top, maybe in this upper zones here. I think the upper zones are more likely. Personally, for me, I think that the 345 to 360 regions are much more likely of the C wave of B, okay? And then eventually we're going to see, after the top forms, a bigger drop for the C wave going down next year, again, potentially by the end of next year, not this year. Okay, so that's really my view as far as Tesla is concerned. As long as Tesla stays above key support, yes, I know I'm repeating this point, but as long as Tesla stays above 200, 202, I'm going to give Tesla some more room in the next several weeks and months, despite any pullbacks that may occur here for the upper levels. And by the way, if Tesla does not see a pullback soon and instead just follows through and takes out the prior high that was made here some weeks ago, that would be even more bullish for Tesla if it takes out the prior high that was made. But that is something to keep in mind. Now, let me show you the other potential wave count, the red count. Now, let me say this. I'm only showing this from the point of view of risk, okay? If my bullish wave count for Tesla here, if this is wrong, and let's say Tesla stock was suddenly to drop below 200, 202, then I have no choice to abandon this wave count and instead move into this red wave count. Okay, so I would only move into this red wave count, which again I don't think is likely. I'm not expecting this, but I would only consider this wave count, this bearish red wave count, if Tesla stock was to plunge and fall below the 200 level. Okay, so if Tesla was to suddenly drop from near current levels or higher levels, if it were to drop and plunge below 200, 202, this support level here, or let's just say these levels here, both these levels. So let's say 200 and 181. If both of these levels get breached or broken in the next several weeks and months, which I don't expect, again, this is a lower probability expectation here. I don't think it's likely, but if that support level was to get broken, then I would have to move into this bearish wave count, which would mean any drop below 200 would mean a likely C wave, the third wave, the C wave, to much lower levels. By the way, that would mean that this was the wave 1, wave 2, and the wave 3 of the C wave to much lower levels, below the lows that were made in 2023, which would take us all the way to next year, by the way. Not this year, but all the way to next year. In other words, quite a bearish wave count and a big drop to occur, not just this year, but going into next year. Again, let me just repeat the point I made earlier. I'm not bearish on Tesla. So this is a lower probability wave count and scenario. So I'm not expecting this. For me, this yellow wave count or blue and yellow wave count is much more likely. So I'm actually bullish on Tesla for the next several weeks and months, despite any pullbacks. So even if we see a pullback in the near term in the next week or so, I think as long as Tesla stays above, as long as Tesla protects and stays above this region here, the 200 level, I'm looking eventually for Tesla, perhaps by the end of this year and next year, eventually to move into the upper targets, again, in this region between 314 to 338 to potentially the upper levels, 345 to 360, likely in the next several weeks and months. Okay, guys, that's really what I have here on Tesla. Let me know what you think in the comment section. Which wave count is more likely for you? Do you think we could see higher levels by the end of this year? Forget the next few weeks. I'm talking about the next several months. Do you think we could see much higher levels in the next several months going to the end of this year? Or do you think we could see much lower levels in the next several months? Let me know in the comments. All right, guys, if this video has helped, please give it a like. And also, please subscribe for future video updates. Thanks a lot. Bye for now.